Right now, we're at the peak of this insane AI gold rush. But one legendary investor, he's making a massive bet against it. So today, we're going to unpack that bet. It's a fascinating story that targets one specific tech giant, and honestly, it calls the whole AI boom into question.
All right, so let's get into it. The name Michael Burry, yeah, that probably rings a bell, right? The guy from The Big Short, famous for that legendary bet against the housing market. So, when he makes a move, Wall Street, they definitely pay attention. The big question is, what's caught his skeptical eye this time around?
The company right in his crosshairs is the industry titan, Oracle. And he's not being subtle about it. He's using a mix of put options and direct short selling, which is basically a really clear, aggressive bet that Oracle stock is headed for a big fall.
So to really get why he's making this bet, we've got to look at what Oracle is doing. They're in the middle of this massive strategic shift. And I mean, this is not just some minor course correction. No, this is a full-throttle, all-in kind of pivot.
What's happening is Oracle is trying to become a dominant force in the AI hardware race. And to do that, they are just pouring money into these massive new data centers and cloud services. But here's the catch. All this ambition, it's being funded by a mountain of debt. It's a huge gamble, all in an effort to try and catch up with the established giants in the space.
And when I say massive, I mean staggering. Just look at this number, $300 billion. That's the reported size of a 5-year cloud computing deal they signed with OpenAI. I mean, on paper, that's a huge win, right? But actually fulfilling a deal that big, that comes with an incredible amount of pressure and cost.
And here's the other side of that coin, $95 billion. That is Oracle's outstanding debt. To put that in perspective, that makes them one of the largest corporate issuers outside of the entire financial sector. So this is the immense financial weight that's sitting underneath that massive AI gamble.
So as you can imagine, this whole high-stakes strategy sent the stock on a complete roller coaster ride. When the OpenAI deal was announced, boom, the stock shot up 36% in just a single day. But that euphoria, it was really short-lived. Once investors started to digest the enormous costs and the execution risk involved, the stock gave back all of those gains, and then some. It ended up finishing the year about 40% below that September peak. Just wild.
Okay, so that brings us to the core of Burry's thesis. Let's look at how all of this builds into his bet against Oracle. What is it that makes him so skeptical of this whole strategy?
Well, Burry's own words really cut straight to the point. He says, "I do not like how it is positioned or the investments it is making. It did not need to do what it is doing. Maybe ego." I mean, wow. He's questioning the fundamental need for this pivot and even speculates that it might be driven by something as simple and, for investors, as dangerous as ego.
So you can see his bearish case isn't just some gut feeling. It's built on these really tangible risks. You've got the massive debt burden, which creates a ton of financial fragility. Then there's the high execution risk on these new ventures, add in the demanding capital expenditures. The whole thing is a huge gamble. And all of this is reflected in that extreme stock volatility we saw, which is basically a giant sign of deep investor uncertainty.
Okay, but this brings up a really fascinating question, right? If you're skeptical about the whole AI boom, why single out Oracle? I mean, why not bet against Google or Microsoft or Meta? They're all pouring billions and billions into AI too. This is where it gets interesting. Burry sees a really critical distinction here. He basically divides them into two camps. On one side, you have pure AI bets, companies like Oracle and, say, the chipmaker NVIDIA. Their success is now so heavily tied to this whole AI infrastructure boom. But on the other side, you've got these diversified giants like Google, Meta, and Microsoft. Their dominant core businesses, things like search, social media, and software, they act as a massive cushion for their AI investments.
And this quote from him explains his logic perfectly. He says, if I short Alphabet, I'm shorting Google's search. If I short Microsoft, I'm shorting a global office productivity SaaS Goliath. The big ones are not pure shorts on AI. See what he means? If you bet against Microsoft, you're not just betting against their AI projects, you're betting against the global dominance of Office. If you short Alphabet, you're betting against Google Search itself. Those core businesses are just so powerful that they can easily absorb the costs of their AI spending.
So it's pretty clear now, right? This very specific, very targeted bet against Oracle fits perfectly into Burry's broader skepticism about the entire AI boom, and it really shows his unique strategy for how he bets against these things.
And his strategy is classic contrarian thinking. He believes the best way to bet against something like the AI boom isn't to find a company that's obviously failing. No, the best short, according to him, is a company that is the most loved and least doubted. It's a company that everyone celebrates, where optimism is at its absolute peak, because that's when skepticism is the cheapest.
And this isn't just a one-off thing with Oracle. He's done this before. He previously targeted the AI chip darling NVIDIA for this exact same reason. He even noted that because everybody loved the stock so much, the cost to actually bet against it, to buy those put options, was cheaper than for other stocks where there was already more doubt. So you see a strategy. He's looking for the cracks in the most celebrated, most hyped-up stories of the AI gold rush. So, all of this leaves us with a final, pretty provocative thought. Is Michael Burry's bet against Oracle just a targeted bet against one company's really risky strategy, or is his move something bigger? Is it a warning sign, a canary in the coal mine, for all the froth and hype that's surrounding the entire AI industry?